What's going on, guys? How are you doing? This is Shocks, and this is Limitless Shocks YouTube channel. So guys, I welcome you back today to this YouTube video where we are talking about what you didn't consider on market structure. We are talking about market structure, or you need to know concerning market structure. So in today's discussion, we are going to analyze and to discuss what you probably have been missing in your analysis of market structure. So guys, first of all, I just want you to remember that when we are talking about market structure, this is the basic schematic that we draw on our charts. So having this in mind, this being the basic of the schematics that we draw when dealing with market structure, we just consider a break of a high and a retracement to a point of interest, then price calls. But today I want you to understand something that I'm here to share with you. So we are going to talk about highs and lows. We're going to talk about discount and premium. We're going to talk about equilibrium, and we're going to also talk about what are the best points of interest or the best order blocks that you can trade located in the market structure schematic. So guys, let me start by getting to your attention this thing. So number one, we are having what you call a low, right? Then we are having a high. All right, so this being the low and this being the high in a particular market scenario, this then becomes our range of trading. So this being the range of our trading, it means we are only considering things that happen in this vicinity. What we are saying is, when we want to consider market structure or to consider setups to trade, we're only going to consider setups from this high to this low, right? If you want to sell, we are going to sell closer to the high as possible as we can. Then if we want to buy, we're going to buy closer to the low as possible as we can. So you know that. Why? Because when you started trading or when you started investing, people will tell you sell high, buy low, right? So that's what we want to do. So when we are talking about sell high, buy low, we are talking about the market scenario looking like this. So if we have a schematic that looks like this, it means this is the low and this is the high in a particular trading range, in a particular period, in a particular month, and things like that. So that's what we are saying. So with that in mind, what are we saying? We are saying if a market is something like this, a low, this being the low, the starting point, and this being the high, we are saying we have what you call premium and discount. So when you say premium, it means it's profitable to sell at premium. Then if you mean if we say discount, it means it's cheaper to buy at discount. Meaning if we have a particular range that we want to trade from, it means we have a low and a high. Then from the low and the high, we should be able to divide our range into premium zone and discount zone. So what we mean is, if we divide this range into two like this being the 50% level, right? You can use the Fibonacci to distinguish between the two. So the top range here is what we call the premium zone. So if you want to sell, you have to sell in the in the discount, in the premium range, right? In the premium zone. If you want to buy, you have to buy in the in the discount range down here. So that's what we are doing, and that's what we are going to talk about, right? So when you sell in the discount, you are selling at a loss. That's what it means. If you buy in the premium, you are buying expensive things, expensive stuff. No one wants to buy expensive stuff. So we go back to our charts. Let me explain this. This is a GBP CAD, a GBP card. So from what we are seeing, remember, everything we do starts from what? From market structure. That's why I decided to talk about market structure today. Okay, we will start here. This was a break of what? Of a market structure. This was BMS, right? So from the BMS that we have marked, we see that this is the high, right? So let me mark the high like this. So this is the high, right? And this is the low of the what? of the this is the first low, this one. So this is the what is the range. So this being the range, we are going to determine the equilibrium of the range, which is the middle line. So the middle line being the equilibrium, it means we have what? Okay, let's change the color of the middle line so that we can clearly distinguish between what we're talking about. So this is the middle line, which is the equilibrium line, meaning the discount area is up here and the premium area is up here and the discount is down here. But since we are in a bearish market structure, like what you can see here, it means we are going to consider order blocks that are in the premium only so that we can sell from there. And don't trade in the middle of the range. So you are not going to take this trade, okay? You are not going to take this trade, and you are going to, if it misses and it creates another high like this, it means it has taken out market structure here. You are going to have another new low, and you are going to have another new equilibrium line, meaning this is the premium zone. That's where we want to sell from, and you are going to consider order blocks in the premium zone as closer to the high as possible, and you're going to sell from that. Why? Because it's profitable to sell from that point and area. You understand? So this being the order block, you understand from the last video we talked about, if you sell from the order block, the next trade is going to be the flip zone. You understand what happened here? Break of a low and you see that trade. So that's what we are going to do. But if you go down here, you will see that price did take out this high by this move. So this move took this high, meaning we had a new low, which is this one, and a new high, which is this one. So our premium is up here and our discount is down the yellow line, meaning if you want to buy, we will only buy under the yellow line, under the orange line here. So as you can see, our order blocks that we were going to consider are here, right? So price did not get to that and created another low, which is this one, and another high, which is this no, the other high is this one. This is what it took out. Then the equilibrium line is around here, and our order block is going to be this one. And price did not get to that, but remember we have the flip zone, and the flip zone is under the what? Is under the yellow line, the equilibrium, which means we can be taking this trade as an as a flip zone one, as a flip zone trade to go up, meaning we would have a new low. As you can see, this will be the new low and this will be the new high, and this being the new high, we will determine the new equilibrium line, and we will trade from that. And we continue doing that. Now we are here, we want to consider what is happening at this point. And as you can see, this is a change of a trend, right? Break of structure, change of character, right? So number one, we have this low, then we have this high, as you can see. But now, since we have that, we are going to determine our equilibrium line, which is around here, and our order block is going to be somewhere in here, right? So when that order block is missed or retested, you determine what happens, or the market will determine this is the new low and this is the new high. This being the new high, we have a new equilibrium line. We're having a new equilibrium line here. We have retested, or we have retraced back to the order block, meaning the next order of trade is going to be what? It's going to be flip zone. If you don't know about this, you can check out our video that we uploaded before this on this channel. We have that video packaged and we have that video ready for you to learn, and you can look at that video and understand how do we integrate order blocks and flip zones. So if you go and watch that, you can come back to this one and finish and understand what we are saying in terms of ranges and in terms of market structure and in terms of selection of order blocks, right? This is the new low that we have created, this being the new high, this being the new high, and our middle line is somewhere here. That being somewhere here, we have this order block, and see what price did. Came back and retested the order block. Next time we are breaking this high and we have a new low, which is this one, and a new high, which is that one, and a new middle line or equilibrium line, which is that one, and we are going to look for trades in this area. And as you can see, price was just going in our direction as we had anticipated there. So that's what we are doing, and we will continue doing that as we go. So this is to show you how to choose better order blocks and how to choose high probability order blocks in using the range, using the highs and lows, and doing that as we go, as we analyze our charts, and being patient doing that and analyzing and waiting for the trades. You understand? So if we are to consider this, we understand that this is the high and this is the low. So this is the range of the market. So this was a break of a pin. We don't consider that, and we would only consider a break of a body. So this being the equilibrium line, we are going to consider order blocks that are above, which are in the premium zone. So this premium zone would result into giving us this trade, which we would then take gladly. So guys, we can go right now and mark this high and mark this low. So this is in real time now. So what do? We then mark our order block responsible for that. Why? Because it's above the what? It's above the equilibrium line, meaning it's in the premium zone. Being in the premium zone, price came retraced back to the order block, retest the order block, and collapsed down. So this will be the if we enter close to the low, the next target is the high. If we enter close to the high, the next target is the what? Is the low. So you might want to write this down so that you don't forget how to treat these things. So this was a bit British Canadian dollar, and we are going to look at AUD USD and see how this was behaving. So we start from here. We have a low. Okay, let me do this. We have a low, which is this one. This was the low, right? Let me delete everything here so that you can see what we are saying. So this was the low, and this was the what? The high. This being the high, we have the what? The equilibrium here. The equilibrium being somewhere around here. Remember, I said you can use the Fibonacci to mark the equilibrium, which is the 50% zone. This is the retest, right? This being the retest order block, we go to flip zone. Then after a break of this high, we form a new high, this one, and a new low, and we expect price to retest the order block as we go. So this is how you look at price, and you will be doing that as you go. So this is the new low, and this being the new high, this one, and we are going to wait for trades at this area. And as you can see, we formed another new low and another new high, and price was supposed to trace back to our discount area, which is below the equilibrium line, which we have been drawing throughout this session. So we have the high, we have the low, and we have the equilibrium around here, meaning we can sell in premium and we can buy in discount. So let's go to this. We have this high that was cemented there, we have this low, and we have this around here. So that's what we are doing, and that's what you are doing as you go. So guys, in short, in conclusion, what we were just saying is, if we have something like this, we have the high, we have the low, the equilibrium line, you buy above it, you buy below it, you sell above it. Equilibrium economics 101. Guys, trade what you see on your charts, don't force things. I hope this piece was helpful to you, and I'm out. I'm Socks. I'll see you in the next one. Hope